You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. Welcome back to the option block, everyone's favorite. I hope it's your favorite. It's certainly my favorite bi-weekly source for all things options related. Some wit, some wisdom, some analysis, some unusual activity, a little bit of fun and repartee, mix it together with your questions. You got the option block. My name is Mark Longo from the OptionsInsider.com, as well, of course, from the ever-exciting Options Insider Radio Network. Quite a few programs. Check them all out, 15 plus. You know where to find them, theoptionsinsider.com, as well as, of course, via your provider of choice. Could be your iTunes, your Stitchers, your Google Podcasts, whatever you use. Pocket Cast, there's a million of them out there. Downcast, Dog Catcher, million of them out there. Whatever you use, we're there. If we're not, let us know. Or you can always just go to our website, find the show you like. The RSS feed is right there for you. Just paste it in to whatever platform you like, and then you can make sure it's there yourself, so you don't have to wait for us to get around to fixing whatever it is you may want. And whatever platform you like, if you like the show, hit us up with some recommendations, some reviews. 5 stars is always nice. If you want to go 4 because of the Rock Lobster, I may understand maybe what you think about the show there. Always fun as well. Don't ask questions there, though, because we don't review those in a very timely fashion. If you got a question you want on the show, you know how to hit us up. Social media at Options, on StockTwits and Twitter, or the website feedback form, Options Insider on Twitter. The old-fashioned way, questions at theoptionsinsider.com. Or the hardcore amongst you can always check us out live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR. You can get in there, listen, stream the show, ask questions, all that fun stuff. If you're hardcore and you really want to get in there, we'd love to see you in there. And joining me on the old program today, of course, you know them, you love them. Let's go in order of reverse proximity. So let's go out to the shores of this fine country where the Rock Lobster is steering forlornly, just depressed out into the ocean, watching everyone else he knows frolic in the ocean while he's here talking to us. Mr. Rock Lobster, welcome to the program, and try not to spread your depression too far and wide, sir.
Well, I'm not totally depressed. I mean, somebody's having fun. I'm here having fun because I'm talking to my homeboys, Mark and Mike. So I'm having fun. However, I'm not having that delectable, delicious, Maine summer fun that, wives and children get to have. But they work hard during the rest of the year.
Wow, so we've been upgraded to homeboy status. That's something. That's saying quite a lot. It's a title I've aspired to all of my days, and now I finally get to be the homeboy of the Rock Lobster itself. Let me toss it to my other homeboy then, my fellow homeboy in crime, Mr. Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, how are you feeling about being elevated to the lofty status of homeboy, sir?
I didn't know that I was. I guess I didn't hear the part where I was update up to. I guess we are homeboys. So
Mike and Mark. I said Mike and Mark.
You did. Okay, that's right. You did. Okay. I'm actually surprised you didn't claim any umbrage on him. He has you losing a star on our ratings, and he's saying all those things about your depression. And oh my goodness, I almost want to claim umbrage on behalf of my main homeboy.
He still has me on 5 years later. I'm just putting it down to petty jealousy. Petty jealousy is coming from the grand CEO of the Option Insider conglomerate.
He's just mad because he doesn't know how to trade a call, stupid.
Yes, I haven't figured out the majesty of buying both one and the other, or selling both one and the other. The intricacies involved have eluded me. But you can't take umbrage against me because I'm your homeboy, and you can't do that. All right, without further ado, before he changes his mind, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. Like the man said, this is the portion of the show where we tell you what's catching our eye, what was going on in today's market activity. Like I said, we're streaming this live and recording it on Monday, the 17th of July. Hard to believe we're already halfway through July. Crazy cakes, 3 p.m. Central, 4 p.m. Eastern. So the session is behind us. Got some names popping off, though, after the bell. We'll get to those in a wee bit. I think most of the market is kind of sitting on its hands saying what's going to go on with all these earnings. We got just a slate of earnings coming out this week. And so most of the major indices said, let's wait and see. So most of them pretty much closing at the end of the day, almost literally unched for pretty much all of them across the board. So not a lot of action. VIX cash actually inhaling a little bit, getting that weekend back and then some, flirting with the 10 handle, closing the day. Let's see if it broke. Yeah, intraday got to 10.03, so it did break the 10 handle, got into those lofty double digits ever so briefly, then gave it back up again, closing right around 991. So still in the 10 handle. My prediction still looking pretty good out there for vol views. Since he's my homeboy, I got to toss to him first now. Mr. Rock Lobster, we got a lot popping off after the bell, but before we get to that, what caught your eye in today's activity, sir?
What? I don't want to jump the gun on the Blue Apron, so I'll save that one. But how about that? I think just overall from a vol point of view, I think the market took a little run up and starting to take a flyer on tech. Actually, one of my clients, he's kind of a smart guy. He's like, we just should be buying calls into all these tech earnings because everything's been running into the earnings, and then before the earnings, you sell them out. So. One thing, the prescience of said client on those things looked pretty good. Also, the fact that we had what I would say is a reasonable, very normal markup for VIX. So there's no real jump in vol, today adjusting for the weekend. So I think the biggest thing is now we need some earnings to kind of get things going. I think the banks were kind of a blah, but they're already at all-time, they're already at multi-year highs. So, besides Jamie Dimon spouting off on too much regulation stifling our economy, I'm looking now to see how those earnings go, and I right now it looks like there's massive expectation baked into the technology stocks. I mean, forgive me if I'm wrong, but Netflix used to be $100. Like what? And this is prior to the split. Let's see. How far ago was that? It was all of October of 2016. It was $100 stock, and it has not looked back since. So I think a company like that is, again, going to be technology bellwether, and we'll see if it's worth it to crush that Q volatility and buy upside or not after, I think, just a couple of these. Because they seem to all kind of be moving in lockstep as far as, as the internet and phones and everything else is sort of, that was I think I've been pounding the table for that for a while, Q. It is as ubiquitous as it's becoming. It feels like it's only going to get more so. So everybody that is connected in, it's sort of like seem to be running away with the dollars right now. So that's more of, what I'm looking at this week. But today, that really was the story there. There just wasn't a lift in vol. We're looking at very low. Even vol is very low. The August future in VIX, I believe, was at 1170. They're taking the heat out of this stuff. It's a very normal contango for VIX right now. It's $2 over, but also VIX is at, multi-year lows. So when you see that kind of normal future premium, it's just the market sort of expecting this is the way it's going to be. You could see 9 VIX all week. You could see it for the next 2-3 weeks. So the traders are content to not have too much vol premium in anything.
Yeah, it's funny. Just on vol views on Friday, we were talking about that AUG future and VIX. I think the previous record was 12.21, hitting 12.20 for a record for I think that's close. I'm not sure that's intraday, probably close for that contract, and now flirting with 11.70. So those old records just out the window in terms of
See you later.
how much we talk about them on one day, they're gone the next. It's amazing how, yeah, you're right. There's just no reluctance out there to hit a bid in the vol space. So maybe there is some truth to that. Everyone and their grandmother is currently just blasting the hell out of VIX. And you should ask your grandma, see how she's doing. Probably doing all right. Maybe it's time for you to ask for a little more in the holiday greeting cards from good old grandma, courtesy of her short VIX strategy. Mr. Uncle Mike, what was catching your eye in today's activity, sir?
Well, I think technology is the big story right now. If you look at it, not so much today, but there's some tech companies that were up today. But I'm just looking at this is kind of an interesting statistic to me. Over the course of the last 11 days, from July 6th through today, Microsoft is up 7%. And Apple is up 5%. And the reason I'm just looking at those names, they're in the triple income portfolio that we have at RCM, where we're selling calls and writing puts and doing all that fun stuff on. But there's definitely, in terms of what Andrew's student had said, in terms of let's just buy calls and write these things up, had he done that the last 10 days, it definitely would not have been a bad idea. And if he expects continuation on this, Apple still has their earnings aren't till, I believe it's August 1st. I'm not going to verify that with Longo just because of some past issues we've had with such things. If you ever want to get some good comedy, though, go back to some of our episodes. I think in the between 200 and 240. I have to admit, Mark got me pretty good back in those days, but I forgive him, although I will never forget. Yeah, there's still going to be some time going into the Apple earnings, which I think is going to be the biggest earnings for tech, in my opinion. So tech, I'd say, is the big story right now. The other thing, just to kind of add to what I was talking about a little bit last week on the strategy block, silver is recovering a little bit. So I'm hoping that for educational purposes, of course, so not to be greedy about getting money, but I'm hoping for educational purposes. Oh, what the heck? I'll be greedy. I want to make money for myself and my clients. If silver recovers the way that we hope it does over the course of the next 6 months or so, the no-brainer roll down that we talked about on the strategy block on the previous episode could really be something unique and something that I'd really make reference to over the course of the next few months for anyone that's following my silver strategies that we're doing. So that's what's going on in the marketplace. From where I stand, I think that I would agree with you in that a lot of people are sitting on their hands waiting to see what's going to go on with earnings. From a macro level, we have the healthcare bill. So what's happening there, I think we talked about IBB a little bit on the show on Thursday. IBB is the biotech ETF that represents the biotech companies. And then so when the healthcare information was announced on Thursday, it caught a little bit of a bid. But right now that's even flat at this point, and pretty much everything on my screen other than what I had just mentioned, and even the things with which I did mention, there was not a ton of movement across the board. And that's what's going on out here. I'll toss it back to my homeboys.
The homeboys. That's probably going to have to work its way into the title in some unfortunate capacity. Let's get to the big boy popping off after the bell. It is nice to get back to earnings season. You know, we talk about a lot of vague macro nonsense sometimes because that's what's driving things. You got saber rattling in North Korea, you got the ever-present Trump tweets, you got the Russia will they won't they dance, healthcare, etc., so on and so forth, Russia back again, everything else you could think of. Sometimes it's easy to get sucked into the weeds there. It's nice for the clear, straightforward math that is earnings. Speaking of that math, before we even get to Netflix, which is popping off right now, we asked our listeners, instead of doing a question of the week, we're doing some shorter ones this week because it's earnings. We're going to ask you guys about different names. We gave you a little flash poll for Netflix, the old Widowmaker. At the time we wrote this up, probably about an hour and change ago, It was trading 161.19. It closed today, I believe, flirting with the 162. Yeah, 161.70 actually. It closed today, so it got a little bit of juice towards the end of the day. We said at the time they were pricing in about a $13 straddle, so right around 8%. What are you guys feeling on that? Is that way too cheap? Way too expensive? Just right? Or I'm sitting this one out? I won't ask you guys to comment on your own thoughts on this because the number's already out, so you can see if it's too cheap or expensive. But what do you think our listeners said going into this announcement? Let's start with you, Mr. Rock Lobster. Too cheap, too expensive, just right, or I'm sitting on my hands?
I'm going to say they're sitting on their hands. I know what I would say is it's probably too cheap.
Well, yeah, hindsight in the minutes of now seeming to be 2020. Mr. Uncle Mike, same question for you, sir. What are you feeling, or what do you think our listeners are feeling?
I think it's just right. If we're looking at what the number is right now, I'll say it's just right. But
yeah, it is impressive. It is impressive how prescient. Yes.
In terms of what our listeners are saying, I'm going to guess they're going to say sit this one out as well, because I'm willing to bet that we've called this stock the Widowmaker on this show at least 6 trillion times.
Yeah, a little bit of a preview ahead of our mail block today. I couldn't wait on that one. You're right. It was for a while there, right after the announcement, it was almost eerie. It moved almost exactly $13 and was just sitting there. I was like, wow, people are going to start asking us all those questions again about do options move the market and how does this work and all the other fun stuff we get around this time of year and around expiration when people ascribe all these magical powers to options. But yeah, our listeners, net is close. Net saying I'm sitting this one out 37%, 32% saying it's way too expensive. Maybe in hindsight, not the best call. 18% saying just right, not looking too bad, and 13%, ironically, saying it's way too cheap. We got a few hours left in that one. I got a feeling maybe some of the after. Maybe we should have said it for just a couple hours because people are going to look at what happened in the after hours, and it probably will gauge their sentiment as a result. Like I said, it closed 161.70, so just shy of 162. They're pricing in about 8%. They're up about 8.5% in the after hours. They're up, what is that, about $13 in the after hours. So doing pretty good so far for this name. So it seems like it's hovering between exactly right and way too cheap. So the Widowmaker, yeah, if you have to pick a default answer whenever you're talking anything Widowmaker type names, is usually the default answer is too cheap because usually this one blows the doors off. Every once in a while, like the last few quarters, it hasn't been super scintillating. But aside from that, this name is usually reliable to perform in one direction or the other. You're probably going to get something. It looks like they said they'd be on the top line, a small miss on the bottom line. Net streaming adds 5.2 million versus 3.27 million for some of the latest digestion of those numbers coming out of Netflix. Mr. Rock Lobster, any of your hardcores in your pitch chat, are they slinging about a flicks today?
You know what? We will sling it tomorrow after the post-vol. We like it a little better than, but there's a lot of Netflix bulls. And they still continue to be. I guess it's almost weird. You know, like how everybody's cutting the cable. It's all those people are going to Netflix.
I actually just canceled my Netflix recently. I didn't think it was that good.
Oh, really?
Yeah.
Yeah.
I guess just it's like whenever we wanted to get a movie that we wanted, Netflix wouldn't have it, and then we can go to Amazon Prime and get it for like $2 or something, or $3 or something like that.
Oh, okay. I see why you would do that.
But in terms of the shows, I thought I don't watch enough TV, so I guess I'm not really much to comment on that. Besides financial news during the day, I guess we're not very big TV watchers. Why would you be if you live in St. Charles?
So many things to do.
You can go down the street to Skippy's Gyros and Lemonade all day long, and who needs TV in that scenario? But I'm with you on that. We have our Netflix. I think pretty much everyone on the planet just about has Netflix now, and we keep it because it does have a good back catalog. But I'm with you. If you want to see like breaking stuff, it's still not the place for that. Even though they have upped some of their partnerships for some of the the kid stuff and the comic book stuff with Disney, and so the Star Wars, the Marvel, and some of the other animated movies are coming a lot faster to Netflix these days, even before HBO and stuff. So that's a pretty good deal. So if you do have kids, maybe it is worth taking a second look. And clearly, maybe that partnership is accreting to some of these numbers we're seeing today. We'll keep an eye on this throughout the show. The other thing we were talking about, Mr. Rock Lobster, and you were alluding to earlier, is just, I think you can file this under just the most inevitable announcement you could probably think of. But the second you see a popular category taken off and where the lion's share of that business somehow involves shipping, what's the name you probably think is going to raise their hand and say, we want to get in that business too? Just take a wild guess. I'm just throwing it out there for you guys.
It is named after a large river in Africa.
I would have taken South America, but it's all right. You're thinking the Nile.
I know South America. I just was trying
I'm teasing you.
You know,
I'm your homeboy.
It's not the
I'm
Nile.
teasing
Let's
you.
put it that way.
I'm teasing you. Yes, Nile.com didn't do as well as other people thought. I had big money in that IPO. It didn't work out too well for me. Of course, good old Amazon. It is kind of, there's the first mover advantage, and actually, I don't know if Blue Apron was first in the category. They're one of the most well known. There are a bunch of players in that space, so whether they were first or not, I don't know. But they certainly are helping to popularize the category. And when you have that happening, and when the lion's share of your business comes around the shipping component, guess what? And they have a lot of other, pre-processed, ready-to-go goods they slap in a box and ship to your door. Guess what? Amazon's probably going to want to get into that. And what do we see today? Apron, as if Apron already was having a hard time catching a break. They get the news today. They filed a trademark for a competing meal kit service. They don't have the name yet, but essentially to put goods in a box and ship it to your door. That's what they do. So Amazon taking the advantage of yet another 1% pop, while Apron down yet another 10%. Oh, the drubbing that is Apron, Mr. Rock Lobster. I mean, everyone kind of knew this was coming, but still, just the drubbing. It's got to be painful. I know on your long a ton of aprons, it's got to be really painful for you, Mr. Rock Lobster.
I believe we looked at these. We saw the October 5 puts. There was Jan 5 puts and October 6 puts. And they continue to gain in value. I haven't done anything yet on them because normally as soon as something goes down, the first thing I do is not sell the puts. I'll wait a little while, but it certainly is a bit of a like somebody's put the nail already in this young company's coffin. But they hire a couple of chefs and I guess start to create some scale, but. What's weird is, I guess it's one of those businesses where right now it's not super big, but I mean, if everybody just stops cooking, I guess it can be really big. So, I guess people don't want to go to the supermarket anymore. They just want dinner delivered.
Sad part is I'll probably take him up on this because I'm a Prime junkie. I get everything shipped to the house and indeed to the studio as well. So yeah, I'll probably take him up on this because it's easier than setting up another one of these accounts somewhere else. And they know that. That's why they have you in the ecosystem. You're paying money to be in there, and you just want to live there. They want to make it. I think Bezos' stated mission in life is to make it, he said, fiscally irresponsible not to be a Prime member. And I don't know what kind of deals you're going to get for it with this, but I'm sure it's getting close to that. Uncle Mike, are you a Apron devotee, or perhaps just not surprised like the rest of us at the announcement of this news? And are you slinging size of either?
Let's see. That's too many questions for me to remember. But with that, not slinging any size in Apron, as fun as it would be to be short puts there right now, not doing that. But I've looked into. There's certain things that Amazon still. I know I'm probably going to get. They probably are listening to me somehow. But there's certain things that Amazon is not the best at. I mean, I've spent a lot of time trying to actually research the online grocery stores to where you can actually have the groceries delivered to your house. And it's still not a very good business model as of yet in terms of you can't get any cold food delivered to your house without paying a premium price. I don't believe Amazon even has that yet in their Amazon groceries. And quite honestly, a lot of the deals that they have for the groceries that they do have aren't really that good. So if Amazon can figure out a way to do this, I don't know if this is where they live yet in terms of what they'll be able to do for shipping goods in a box in some way, shape, or form. So I don't know if this is going to be a good long-term move for Amazon initially, but it's Amazon. They pretty much do everything that they can for the long term. I can remember just back in the 90s thinking how ridiculous it was that Amazon just isn't making profits. How can their stock still be alive for them not making money? And then we said that for 15 years it seemed. And then, their Bezos is, I think, the second richest guy in the world now. So I think it'll take a while before Amazon can master this business, as with anything. But I'm not going to count them out. They're a very innovative company.
I'm with you. If I heard towards the late 90s, early 2000s, if I counted how many slams I heard on Amazon's non-existent business model, I would not have needed to trade because I would have just been paid by all that negativity. But instead, we all knew how the subsequent decades have unfolded. Not bad for Mr. Bezos and crew, and not bad for you guys, the listeners, because now it's time for you to keep on rolling right on into the weirder portion of the show. I'll give you that. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time for the funky portion of the show. Time for the Odd Block, the portion of the show where we break down weird, wild, wondrous, whimsical, just downright bizarre paper that is lighting it up. Speaking of things that continue to light it up, Mr. Rock, lots of people keep asking us, are these catastrophe puts still trading in the Tesla? And yes, they are. The Jan 20 puts. Those traded a whopping 20 today, up to 10,261. So even those little, nothing puts continue to light it up. And even the 50 puts out in Jan 2019, also doing a whopping 71 today for 28,307. Also 100 of the 65s and 25 of the hundreds. Well, that brings me, let's get to it now, I guess, before we get to it in the mail block. We had someone chiming in, because I've said before on the show, who's trading these things? And some guy wrote in, what is it? Boss Hog Hazard. I like that handle. He said, yeah, I am. So he said, I bought a few today, as a matter of fact. He did clarify himself later. He's not buying the 50s. He's buying the 100s. He said he might buy the 50s if someone sells them to me. I got a feeling someone will sell you those. If you're willing to pay $1.19 right now for those Jan 2019 50 puts, you will have them sold to you, sir. He said I might buy some 50s if someone will sell them to me. What is it? It could go up from here, but if macro fails, raising capital to fund operations will be murder. Debt reorganization time. Not many companies run this risk. Using constant capital raises to fund operations. Rollout looks super slow, not automated. I also bought a few out of the money NVIDIA puts here too. LOL. So there you go. It's who's buying all that stuff, Mr. Rock Lobster? It's, of course, Boss Hog Hazard. He's buying them.
You got to love that handle, don't you?
That's why he made it onto the show. That's just a great handle. I love that. Boss Hog. Anyone who throws a nice Dukes of Hazzard reference into the show, you'll probably get some showtime. If I'm airtime, certainly if I'm on it. Maybe if the good old Meatball's on too. He's never passed up an 80s reference. Probably in his life. I think it's against his contract. He can't do that. All right, let's move out to something, shall we say, something interesting, something intriguing, something weird. We got some unusual activity today. Mr. Rock Lobster, kick things off. This is the newcomer to the Odd Block. This is CHRW Worldwide Inc. Ticker symbol CHRW, closing $68.89, off about 57 cents, so right around 0.8%. If you're not familiar with them, they're a provider of transportation services and logistics solutions. We all know the logistics and shipping area have been very hot of late. Don't even get me started on dry ships, but all that other stuff. Moving quite a bit as this economy shifts to an Amazon shipping-based economy. Got to ship stuff. So these names have been hot of late. This one averages about 2,200 contracts a day, so not bad paper from an Odd Block perspective. Today doing 37,000 and change, about 36,000 of that coming in the puts. So let's get to it. Mr. Rock Lobster, the big print of the day was 25,000 of these AUG 60 puts going up for 40 cents right there on the bid, smack dab on the bid for 40 cents. These went up, I think it might have been on the Philly, marked buy right. So that usually indicates a stock component to the trade, probably delta neutral, maybe 1-to-1. We talked about these before. If you're confused about trade tags, search on the website. What do these trade tags mean? It'll come up both some articles about that as well as our segment, or I should say our show, our episode of Options Bootcamp, where we spend a whole hour explaining those things if you're confused by those tags. But buy right, one of the more common ones, it essentially just means the options went up with some sort of stock component attached. The open interest, right about exactly what went up today, about 26,386 on that strike. So fairly reasonable to interpret perhaps someone deciding to close out the nice long put in stock position. They have earnings coming up in a couple of days, so interesting that they would choose to do so now, but also perhaps appropriate because we also know what happens to these out-of-the-money puts once the earnings event actually happens. Guess what? Not a lot of juice left on that tree to squeeze. Let's look back at the chart here. The past year for, I keep wanting to say dry ships, but no, CHRW. This thing peaked back in February, hitting 81 and change before coming off quite a bit. Like I said, hovering right now right around 68 and change. So it's been a nice downturn since February for this name. Someone looking like they had some puts in stock, deciding to take it off ahead of earnings. Mr. Rock Lobster, what are your thoughts? Do you agree? And what do you think about the timing of this, taking it off right before earnings?
I am always in favor of taking these things off of earnings. I'm just looking at this one. I mean, it looks. I'm just looking at the buy right tag ticket. I'm trying to find the amount of stock that went up against it, but it looks like you want to take them off. But at the same time, did they make any money on these puts if they smack that 40-cent bid? That's the kind of the hard part, isn't it?
Usually, I get a feeling
if you
probably
sell puts
no.
at 40, how much you pay for them?
0.025.
I guess they paid. Is that what they paid for them? 0.025 cents?
I am teasing. No, I don't have the exact print in front of me. We're
That's
homeboys.
the
We tease
second
each
time you
other.
got me today,
That's what we
by the way.
do. That's what
Like,
homeboys
really?
do. We tease about Apple earnings and we tease about opening prices for prints.
Just call this. I'm going to believe anything Longo says show, because I'm becoming a dupe all of a sudden. I feel slightly dupey.
He is your homeboy.
Yes, homeboys like to dupe each other. The sucker born every minute. If you got to ask who it is, it's usually you. I'll let you look for that opening print while I move on to some hog love. It's been a while since we talked hog on the old show. This is, of course, Harley-Davidson Inc. Ticker symbol hog. Closing today, $52 even, up about 0.75% or so. This is the name that does decent paper, about 3,700 contracts a day. Today doing 52,000 or just shy thereof. This is another one that has earnings coming up before the open tomorrow, so hopefully you got your trades off, because if you didn't, it's a little bit too late, at least for the options component. And today we saw, speaking of keeping your puts on, Mr. Rock Lobster, our old friend took them off before the earnings. Our friend here decided not just to keep them on, but to keep them deep. Looks like we saw a July AUG 55 put roll going up today. Yes, I said 55, so these are three handles in the money right now. 4,523 times paper selling the 55 puts on the bid, 355, and then lifting the offer. So no middle market execution there. He's hitting bids and lifting offers. Paying $4.20 for the AUG double puts, doing the whole thing out there for 65 cents. Open interest, the July double put, 6,200 and change, 4,300 on the AUGs. So closing on, could be closing on the old Julys and opening probably on the old AUGs. Kind of weird that is indeed the case, if this is a roll. It's weird that we see someone not close out in the money puts like this, but actually roll them. And if they do roll them, it is doubly weird to see them keep that same strike. Usually if you roll them, they take advantage of maybe getting a little bit closer to the at the money strike. Because who wants to buy an option usually with $3 left to juice still in it, $3 of intrinsic value. If you want to get a little closer to the bang for the buck, maybe you go 52.5 here, or even out of the money you go to the 50s, and you save yourself some money, and you still have some nice protection on the downside. Our friend did not do that. He kept those doubles, which is kind of interesting. Let's look back at the year that's been out here in good old hog. And like I said, this thing flirted with about 62 not that long ago, back in April. It's off about 10 handles since then. So this thing has kind of been on a little bit of a downward trajectory. Hence, you might see why our friend here wanted to hold on to some puts. Mr. Rock Lobster, let's, well, first off, if you have some info on those puts in stock, what they paid for them, by all means, regale us, sir. And then what are your thoughts here on the old hog trade? Do you think he's closing and opening, or do you think he's maybe double opening, which would be even more bizarre, perhaps? And also, in what scenario, if this is opening on the second leg, in what scenario would you keep your in-the-money puts still three handles in the money as opposed to rolling to a more relevant strike?
One is, so for the first of the many questions, It looks like the paper paid 60 cents with the stock price a little lower. So maybe they made a little money on the puts and stock, but on the delta, I don't see how unless it was 1-to-1, because 25,000 contracts is 2.5 million shares, and only 400,000 shares went up today. So unless they bought it 1-to-1 and they flipped out all the stock, they didn't excuse me, they didn't do that well on that particular trade. I don't know what they were looking for, because they're in and out before earnings, maybe looking for the market to collapse, but nothing there for it. Just so I think just the CHRW is kind of a river of tears trade. Hog, and you're looking at, so the automotive industry, right? So they're at peak sales or something. So everybody's expecting the sales to fall apart. I've been reading research about, okay, peak sales for the auto industry. Maybe it's just somebody that just wants to stay short Harley-Davidson. I just don't see that Harley buyer. It's not like you use a lot of gas buying a Harley anyway. Relative to some other smaller bikes, but they seem like, they're not really threatened by the Tesla juggernaut, so to speak. So, but I think that, it is a automotive, a bike's a bike, and that industry it's just been it's all sort of suffering. So I'm thinking somebody's just going to kind of, keep these puts. It's just Hog's not looking great. But again, it looks like they're holding them through earnings. So, it's either could be really good or really not good, or they're just long a lot of stock from lower prices and they just don't want to get rid of their stock. It's kind of the way I see that, but I would have to think that this second block in August is opening.
Does have that look. I mean, it's just slightly more than the OI, right? So it can't really be closing. But yeah, interesting stuff. Also, I like that. What'd you call it? A river of tears trade on the puts. I like that. That's a good title. It may have to be a good episode title as well. River of Tears episode. If you listen to this, you're like, oh my God, these guys are crazy. Then I feel your pain. It's all the Rock Lobster's fault. Blame him. He's my homeboy after all. All right, let's move on to our final name / victim. This is one we talked about before. It's been a little while since we checked in on our old friend Constellation Brands. Ticker symbol STZ, stars. 196.60 is where they closed, off about $1.70, so off nearly a full percentage point. Not a great day for good old Constellation Brands. It's a name that does about 4,200 contracts a day. Today, doing about 22,000 and change. This one's an interesting one, Mr. Rock Lobster. Looks like we saw a bit of a good old time diagonal here in good old stars. In particular, it was the July 190 OCT 220. Call spread going up 7,500 times. Looks like paper selling the Julys for a nice, juicy $8.65. Turning around and picking up the Ox for $2.25, doing a net credit on that trade of $6.45. OI on both strikes is pretty much well below the trade volume today. So it's opening on both legs. So it's not a roll as it might have first seemed at first blush. It is actually an opening diagonal here in stars. It's been a while since we parsed a nice diagonal, so it's always fun. Of course, diagonals, short gamma, tend to be a little bit long vega. Depends on where that second leg is going up, how much vega there is. So that means you usually want this bad boy to kind of hover around that 190 and go nowhere. 190 exactly would be perfect. Then he gets to keep the lion's share of that credit, and then he's got that extra kicker to boot. He can keep it. He can unwind it. He can do whatever he wants with it after that nice premium comes his way on the front leg. And let's see how this name has performed over the last year to see if he's got any indication of that. This thing has kind of been on a pretty solid upward trajectory ever since February this year. It was trading right around 150 back then, so it's up nearly $50 since then. Not a bad run at all. Giving up a little bit today, like I said, but still not a bad run. Interesting candidate here for a long diagonal here, Mr. Rock Lobster. What are your thoughts here? Does this diagonal appeal to you, or is this kind of in the resounding meh, or is this a Men's Warehouse kind of trade? What do you think about this one?
I'm looking at this, and you see these things, and it looks like, again, this is like a weird cover here. I think the diagonal are they taking some money off the table on this one with Constellation Brands? Because they're rolling into the October, and I'm not quite sure on the July. Let me see. because STZ.
No, it's not.
There's a lot of open interest on
it's
that.
opening on both. It's 4,300. It's not enough to cover 7,500, obviously. So they're open.
I was looking at the 200 stake. What a dummy. It is kind of a strange roll. It's I don't know. It's a strange roll to sell an in the money call like that. It's outside of the it's outside of an assignment for a dividend. It's just a weird. Doesn't it just feel like a very short spread, like a short delta spread?
Yeah, it's pretty aggressive. It's a very meaty front leg and a very, shall we say, less than meaty second leg to offset it. It's a weird one.
Right, and they're not giving us a ratio like the super smart guy did. It's just 1-to-1. So the only thing I can think of is somebody just wants to be really short this thing, or they own stock and they want to get out of the stock, so they're going to sell the 190 calls and then flip into a different delta. Because Constellation, isn't that with all the other ones that they've had? This thing was $145 in January, and now it's $196. Don't they make beer and
Yes, they
booze
are.
and stuff
International Beverage Alcohol Company, a marketer of wine, beer, and spirits in U.S., New Zealand, Italy, and Mexico. So there you go. They do Corona.
Exactly. Well, I mean, if that's the right way that you want to own it if they do Corona. But if you bought the stock, doesn't it feel like there's somebody selling out a bunch of stock on the on kind of the big bump in earnings?
Yeah, it does have a bit of a feel like that, because why else would you choose such a meaty front leg? And that's also would explain why you want that call kicker, just in case all of a sudden, hey, this thing continues to explode, then you get back in. It's a high strike. It's 220. You missed a nice 20-odd handles, but still, it's better than nothing, right?
Oh, yeah, I think so. I don't see how this is not tied to stock because they sold the 190s for nothing, or they just want to be short. And that's a 30 handle short. Which what's the credit they get for it? $6, $6.50.
$6.50. So yeah, that $30, the 30 handle spread could leave a mark.
That's could be another river of tears. So
just asked our friend who bought puts for 60 cents and sold them for 40 cents. That's not bad, and that's already probably leaving a mark. Our friend here could have a much worse mark on him.
Yeah, I think they still want to be long, and they just want the next. I think they scored. I just can't see how there isn't a big block, 750,000 shares, just dwelling out there that is ready to go away on this one. So, and that's a protective call strategy on that. So it's reasonable that way. It's just you would never think that somebody would spend money on these out of the money calls, but options level bull market. Last time I heard,
I knew that call leg
never happened.
I knew as offensive as the short leg would be to you, the deep short leg. I knew the far out of the money call leg would almost be more offensive to you. I know how you just love those legs of all trades. Any bullish risk reversal, anything else that's got an out of the money call leg, you're not a fan. You want to wait and see if you want to buy that call. I know how you work. You're my homeboy after all. So that's why I thought this trade would be doubly offensive to you. The crazy short front leg and then the little kicker on the back leg. Doubly offensive to the Rocklops. That's how we like them here on the old odd block. Now it's time for us to keep on rolling. It's Monday. It's time for you guys. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, let's check back in on the Widowmaker, see how they're doing. Still up about 8, a little over 8%, 8 in the third. Actually just gapped up again. Now it's up 9.5%. So there you go. Wait a second. It'll change. It's trading about 177 right now. So up about 15 handles. So nice couple buck premium to the straddle out there, that $13 straddle out there in good old Netflix. We'll see how it opens tomorrow. Let's see if this has influenced our listeners at all. If they are, if anything, looking to scope out some good trades out here from a poll perspective, knowing hasn't changed too much. It's still about 37% saying sitting this out, 32% saying way too expensive. So the way too cheap folks haven't piled in yet. Maybe they're too busy trading themselves some after hours to vote. If you haven't yet, add options. Get on over there and see what's up. What else we got here? We got F Contango Trader, he writes in quite a bit. He's got a doubler here, actually. Usually I don't allow it, but the second one's got some praise for the Rock Lobster and everyone else, so I'll allow it. He writes in, he sends a link to an article in, what happened to it? An article here in Yahoo that links to, I'll explain his thing first. He says, how about collaring these stocks and seeing what shakes out instead? And he sends a link to this article with his hedge fund manager from KASE Capital, who's now talking about how he's buying Facebook and Google, thinks they're the two greatest businesses on earth. And he changed his mind. He used to be a skeptic, and now he changed his mind because he listened to Warren Buffett, and now he thinks those are the two best businesses on earth. So FK Contango saying, instead of buying these bad boys, maybe you collar them instead and see what shakes out. I'm kind of with you. I'm not a fan of just piling it after Buffett. I don't know if I want a collar right away, though. Like, coming in and establishing a collar out of the gate, it just seems a little bit, if you're that concerned, collars are usually reserved for an underlying that you're long already, and you got some gains on it, you're worried about protecting them, or you're sitting on something and you're worried about it dropping, and so you want to put a collar on. You don't usually set it up at the outset with a collar. That's kind of a weird way to go. I would rather go some other ways. There's many other ways we can go about setting up just the options if you want to go that way. My old friend, the bullish risk reversal, Mr. Rock Lobster, hates that one, so don't mention that to him because it's got a bullish out of the money call leg to it. You can do ratio put spreads. You can buy a put spread, I think it's going to drop, and maybe do 2 on the short leg, so you want to pick some up at a strike you think you're happy buying it with. A lot of ways you can go just using the options if you want to go that route. But I'm with you on maybe not following Mr. Buffett so much. Let's go Uncle Mike. You've been quiet for a while. You've been resting. What's your thoughts on just establishing a collar position in any name? It could be these names or others out of the gate when you first buy a stock. Is that, do you have the same level? Does that make you uncomfortable like it makes me? Or is that you do that all the time?
I do it all the time, but I do it in the conservative section of the portfolio. So, for example, all those silver and all these collars that I talk about on the show, I shouldn't say all of them, but a lot of the collars that I talk about on the show, I'm doing it in lieu of putting money into bonds. There's an old financial planner rule that whatever your age is, that's the percentage of your money that should not be in the stock market. So, for example, let's say that you're 50 years old. This is an extremely oversimplified example. Then if you're 50 years old, in theory, 50% of your money should be in stocks, 50% should be in bonds. I follow that rule kind of. I mean, I have my own modifications for every client, but a lot of what I do is based on that. But the problem is that right now, bonds, they stink right now. You're taking on the risk of the bond, you're taking on interest rate risk, and you're really not getting a lot of return. So what I've done in replacement of the bonds for the conservative section of the portfolio, not with everybody, and not to say I don't have any bonds, there are a little bit of bonds under my management, but, well, I'll be honest with you, not a lot. I've done a lot of the collars, and I've started them with collars, but they're not designed to be a stock style of trade. They're designed to be more of like a bond replacement. So if I'm looking to play the stock itself in the higher risk section of the portfolio, yeah, I'm totally with you, Mark. I don't want to start off with a collar. But if it's in the more conservative section of the portfolio, in that instance is when I would start off with a collar.
And I shouldn't denigrate them too much because I like them. And, I have talked a lot in terms of positions that have great data on them. I think it's hard to beat the collar from that perspective because there's been so much great studies, a lot of them coming out of the OIC over the last decade or so, collaring the Qs and collaring just about everything else to show that there is efficacy. They don't quite underperform. In fact, sometimes, certainly from a risk-adjusted standpoint, they can match the returns of a naked underlying position, but also in a lot of cases they can outperform. So I don't want to poo-poo them all the time. I just don't like someone coming in and initially setting up a collar just because if that usually indicates a bit of concern. I can see why advisors like to do it. That's why the OCC and OIC were talking about them. Advisors need to kind of set it and forget it a little bit. They set something up, move on to the next client. And so in that case, the advisor is kind of the holy grail position for them. For the more active guy who can get in and out, who's watching this all day long, setting up a collar, I can see why you might want to do it, but I think Uncle Mike's approach of doing it in the more conservative portion of the portfolio, not bad. Mr. Rock Lobster, what's your thoughts here? Setting up a collar to begin with, and then when do you use them if you do?
To be honest, I don't use a lot of collars because I don't like giving the upside away for an equity. My rule with a collar is if you buy stock and you buy puts against it, if you can't make much more than the put purchase that price that you have, then you shouldn't be buying that anyway. You might as well just buy the, like a call spread in the SPX or something, because ultimately a collar with stock is just synthetic call spread. So I just, that's kind of how I look at that. So, when I buy stocks, I want more, I want upside. So I think it's a good growth strategy where you just buy a junk put and you buy stock, and that gives you, you're stopped out at a level and I think that works better. So like with Google, Google will be up $90 in a year, and you might pay $15 for a put or something like that. But you can kind of stop yourself out and give yourself some sort of room. Even on recently Google was just down $90 or something from its highs, and it's bounced back. So I like that as a strategy like that. The collar strategy, only when you're really to me, you just want to sell the stock, and if you don't it doesn't get taken away, that's fine. But I could see how people would want to use it to protect gains, and that's perfectly fine. And that I think that way. But if I buy a stock, I want a lot of upside, and just that call against it is just annoying to me. In an equity indexes, it'll work. It works a little better, I think. But anyway, that's how I see that one.
I had a feeling you wouldn't be overly enthusiastic about that. Speaking of which, I let him sneak on Mr. FP Contango, or it should be F Contango, because he also sent a second one. He's giving you some love, Mr. Rocklofts. You're giving a lot of people some love. He said, for VIX-related insights he was sharing with someone, please refer to a bunch of people. He makes Russell. He puts us on there. He puts the Greasy Meatball. He puts you on there too, Mr. Rocklofts. So there you go, getting some love. He also squeezed Bill Valentine in. I got to give him a hard time about that. Bill Valentine was on Vol Views once, and he makes the list already. I got to say, you got to hold out a little bit longer than that, Got to be at least 2 appearances before he makes the list, I would think. So I got to give F Contango Trader a little bit of a hard time on that one. But other than that, I approve of the list. Well done. Good questions. All right, let's see. Let's see if we got any short ones we could squeeze in. Oh, one more. Here's an easy one right here. Fund Concept wants to know, hey, this is an interesting piece on the 3D printing market. Do you think M&A is expected to rise in this area? And it's a link to 3D printing. No, I don't. I don't have. This is not wrong show, wrong network. We don't talk 3D printing. I appreciate your listening. He sends in a lot of questions all the time, but usually they're not at all related to what we talk about here. So I appreciate your listening. If you got an options question, we'd be happy to answer it. I don't know about. This is not the 3D printing show, shall we say, but good stuff nonetheless if you are interested in that neck of the woods. All right, we got to keep on rolling. Time for our final segment, time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like the man said, the portion of the show where we break down the rockin', the rollin'. Netflix up nearly $17 now, so almost outpacing that straddle by a whopping $4, up about 10.5% right now. So rockin' and rolling out there on Netflix, and it's earnings season again. It's nice to say that. Tomorrow for the bell, we got Goldman and Bank of America. You got TD Ameritrade. After the bell, you got good old Beamer, good old IBM. Wednesday, you got Qualcomm. They got Morgan Stanley. You got a bunch of names popping off. Thursday, you got Softy, eBay. It's going to be a fun show on there. E-Trade, a bunch of ones. Good old Softy. Mr. Rock Lobster loves that name out there. And Friday, you even got some names, Moody's and Honeywell and GE and a bunch of others. So pick your poison. Broad manufacturers, tech, banks. I don't care what you're into. There's a name popping off here for you this week. So hopefully you can sink your teeth into something. That said, let's start with you, Uncle Mike. What are you sinking your teeth into for the rest of this week, sir?
Well, just watching the markets in general, as I always say during this segment. But we have earnings coming up, so just be careful with what you have. And if you're able to hedge things in an efficient manner, I would go ahead and do so. And with that, we also are on a 5-week expiration cycle right now. So, which is, you don't really have those too frequently, although they do occur a couple times a year. So going into Friday, we do have the 5-week expiration cycle. So just interested to see on how some of our longer term options, and by longer term, I mean 5 weeks, play out.
Not quite the 2-year scenario you're using a lot these days, but 5 weeks, we'll take it. Mr. Rock Lobster, aside from your abiding love of all things 3D printing, what's catching your eye this week, sir?
You know, it's funny on the 3D printing. That has come up in our chat room several times. For somebody that likes it, look at long-term calls in there. Like in 3D systems, DDD, they're not very expensive. You could buy the 2019 calls that are the 22s for like, I don't know, $2. It doesn't look very low vol. Anyway, that's all I'll say about that. However, I don't know if there's a takeout, what price you get for them.
I just got through saying how much you hate out of the money calls, and now you're telling everyone to go out and buy a bunch of out of the money calls.
Well, if you have a 2 or 3 year time horizon, it's a different story.
I got you. I'm just giving you a hard time, as us homeboys like to do.
I mean, we'll look at it this way. Yeah, you can buy the 2018 17 strike call for $3.20. I mean, there's definitely premium in there, but it's only 50% implied vol. So it's not, it is not that much money. So to me, it just doesn't look very expensive for, I would not be buying the 30 calls, but maybe 2-3 strikes away from the money would be reasonable. So
it's only $1.32 for the 30s. Get out there, live a little.
Yeah, I know. Hey, next year's 30 calls are only 20 cents. You could have a 10 banger on that one. Who knows? But anyway, besides going down the rabbit hole, tech earnings. That's what I'm looking for. Are they going to be as good as everybody thinks? So apparently Netflix, they like it, except for Tucson.
They like it. That's the understatement so far of the week. We shall see. Thursday show should be fun. A lot of good names popping off. A lot of good ones to talk about in the rearview mirror as well. Nice to sink our teeth into some earnings. And if you like some cheap 3D calls, there you go. 3D printing calls. There you go, Mr. What was it? Fun concept. There you go. Trade some calls with the Rock Lobster and all things 3D printing. That music means we're done. Listeners, thanks for joining us. We love you all. After the fact, live, all of the above, donkey carts in Czechoslovakia. However you get the show, we do love you. Before you go, let's check around the horn one last time. Uncle Mike, let's start with you. What's cooking in the land of all things? And how, RCM, how goes, sir, the war on ticket charges?
Oh, we're winning the war every day, one trader at a time. If you hate the ticket charge, like a lot of people do, make sure that you contact me in some way, shape, or form. There's my other phone going off right now about so many people hating the ticket charge. We have relationships with brokers to where we can have a very reduced commission charge, 35 cents per contract with no ticket charge. Of course, we charge a little bit of a fee, but we got to make money somehow. But with all that being said, if you're a 1 or 2 lot trader, whether you have a large account or a small account, give me a call. We'll talk about how we might be able to work with you. Restrictions do apply, but give me a call or shoot me an email, and we most likely will be able to help you. 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
There you go. Hit them up if you, too, want to declare war on ticket charges. And Mr. Rock Lobster, last but not least, first off, how did the long gamma thing go? What else you guys got cooking?
The actual long gamma class is going to be Get Your Juice for Free on this Saturday. Mark, our biggest attended webinar, a free webinar ever was, Mark did it, I believe, on Wednesday or Thursday last week. So go to optionpit.com/events, and you will... you can sign up for a 10 cents on a, what is it? It is a dime, what is it? 12 cents on a, it is an eighth on a 10 lot.
There you go.
For that class. And if you don't learn at least that much of that class, I will be hugely surprised.
There you go. Check it out over there at Option Pit to learn more. And on behalf of the Rock Lobster and Uncle Mike and indeed myself, thank you all for listening. We love however you get to us. If you are listening to us on one of those aforementioned platforms, feel free, if you like, put a review in there, whatever you like. I'm not going to be one of those guys that says, hey, 5 stars, whatever you feel like. If you're feeling 3 because of the Rock Lobster, I won't fault you. If you're feeling 5, I'll allow it 2. Whatever you feel. Head on over there, put some reviews, tell your friends. The more, the merrier. We do love to hear from you guys, and we'll see you next time for more of The Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.